What's going on, traders? In this video, we're going to be talking about reading the market trend, right? Understanding, are we in an uptrend or are we in a downtrend? Is the market range bound, consolidating where we are not in a trend? I want to get you guys clear on being able to look at a chart regardless of the time frame and be able to clearly understand and determine the trend that we're in. Why is this important? It's going to help you with your trades, right? Help you make better decisions on your trades, right? There are going to be a lot of trades that you may want to hold a little bit longer because you're expecting follow through if you're trading with the trend. So being able to look at the chart, look at multiple time frames to determine what the trend is going to help you make better decisions of, am I expecting more follow through out of this trade where I'm going to hold it for a longer period of time because I'm trading with the trend? Or is this going to be a quick scalp, right, where I'm looking to trade against the trend, a counter trend reversal type of trade where I'm not really expecting follow through, but I'm going to scalp this, get in, get out quick. It's going to help you make far better decisions and have those expectations with your day trades, with your swing trades. And there's going to be a lot of strategies as well that you maybe have learned already or that you will learn that really require you to understand what is the trend. Are we uptrending? Are we downtrending? Are we starting to see the start of a reversal from uptrend to downtrend or the downtrend to an uptrend? And there's going to be a lot of strategies that do require you to understand what the trend is, right? For example, the second leg long or the second leg short. You need to be able to look at a chart across any time frame and understand what the trend is. And so we're going to use NQ on a 4-hour time frame as an example, okay? So it really comes down to, being able to look left and see prior swing highs and prior swing lows and be able to visually see these swing highs and swing lows. So when we look at NQ on a 4-hour time frame and I look left, I see clear swing highs, we drop on off, swing low, we push on up, swing high, we come on down, swing low, right? And so I can see these swing lows clearly, and I can see these swing highs clearly, okay? Now, if we have clear higher highs and higher lows, we would be considered in an uptrend. And you only need 2 clear segments or 2 clear legs in one of those directions, whether that's up or down, to determine a trend. And so what do I mean by leg? So from this swing low to this swing high, that's a leg to the upside because this high was higher than the previous high. So we put in this high, we put in this low, we put in this higher high. So this is a leg to the upside. Another term you may hear is a segment, the first segment to the upside. I say leg to the upside. So if we're just really looking at this region here, right, we're not going to look left, we're not going to look down here. We're just going to look at this area right here. And let's say this is where it started, okay, just for the simplicity of this breakdown. We can see that we have a swing low, push on up, swing high, pull back, swing low, push on up, swing high. And we could see the swing lows. We can see the swing highs. So how many legs or segments do we have? Well, we have this one here. We pull back, swing low, next leg up, and then we put in this higher high. So we can see that we had a high here, a low here. We push on up, a higher high here, a higher low here. We push on up, a higher high here. So as long as we clearly see we have swing low, swing high, swing low, swing high, and we're building higher highs, higher lows. Higher highs, that's going to give us those legs. So we have the first leg to the upside. We got a pull back. We have the second leg to the upside. Again, we're just using this as an example. So we would be classified in an uptrend because we have 2 clear legs to the upside, 2 clear segments. Okay, so we at this point in time are considered to be in an uptrend when we look at this 4-hour time frame. Right now, if you go to a daily time frame, it's very possible that you're in a daily downtrend, but you see a 4-hour uptrend. So again, depending on the time frame you're looking at, will determine what the trend is. Again, you could be in a monthly, weekly, daily downtrend across those larger time frames, but you could see a 4-hour, 1-hour uptrend. So we would be in a short-term uptrend, but bigger picture, we're in a downtrend. So it's very important to understand that the trend may differ and the trend may change depending on the time frame that you're looking at. And this is, again, very important information and data to have, right? Because if you're day trading the short-term uptrend and you're like, I want this day trade to turn into a swing trade, I think it's going to continue the uptrend on the 4-hour. But you go look at a daily, a weekly, a monthly, and you're in a downtrend, you may not want to hold that swing trade or that day trade into a swing trade. For example, yeah, you see a 4-hour uptrend and you're long, but the daily, weekly, monthly in a downtrend, right? So that would be one of those things that I would see where I'm like, you know what? I can day trade this short-term uptrend on a 4-hour, but again, the larger time frames are in a downtrend, and those larger time frames trump the lower time frames. So I would actually see more potential to the downside on a larger time frame compared to what I see on a lower time frame. So I wouldn't want to swing trade that long based on that example. Okay, so again, just looking at those different time frames, be able to understand what is the trend across those multiple time frames. It's going to help you make better trading decisions. But again, you look at your swing lows, swing high, swing low, swing high. If you're building consistent higher highs and higher lows and you see those two clear legs to the upside, you are in an uptrend. Okay, so let's continue to do this analysis all the way up. Okay, so again, we have swing high, swing low. We have a higher high. We have a higher low. So we have our two clear segments. We're in an uptrend. Let's see if we continue to stay in an uptrend. Then we have a higher high, barely, but this is a slightly higher high. We come down, right? Put in a slightly higher low here. So technically speaking, we do have this slightly higher high. We pull back, a slightly higher low. Still in an uptrend. We have this higher high, pull back, higher low, right? Still in an uptrend. Push on up, higher high, pull back, higher low, push up, still in an uptrend. We have this higher high. Oh, but now we see this lower low. So that's the first time since way back here that we've actually seen a lower low set in. So we see the higher high pull back. We have the higher low. We put in a higher high again, but this drop gave us a lower low. So what we're starting to see is the start of a potential reversal from uptrend to downtrend. Okay, but the trend is yet to be confirmed. Why is that? You need two clear legs in one direction. So if we look at this area, we were clearly in an uptrend, right? We have leg, retracement, pullback, higher low, followed by the higher high, another leg. So we have multiple legs to the upside. Again, we need a minimum of two to determine the trend. And we could see that from back here, we have one leg, two legs, 3, 4, 5. We're clearly in an uptrend. But for the first time, we see a lower low come in. And so this is our first leg to the downside because we broke that prior swing low in the process and put in a lower low. So right now, we would be considered range bound. We are no longer in an uptrend, but we're not yet in a downtrend. Why is that? Because we need to see another leg to the downside, which would be this lower low, which we have, followed by a lower high, followed by another lower low. And if we were to see that, then we would have gone from uptrend to now, where we're at now, range bound, because we don't have two clear segments anymore. We only have this clear segment down. That's the first one. Again, we need two. So we're considered ranging. But if we see the lower high followed by the lower low, then at that point in time, we would say, based on this 4-hour, we are now in a 4-hour downtrend. Okay, we would then be in a 4-hour downtrend. But right now, we are range bound. We are not trending up anymore because we have that lower low. but we're not also trending down because we need that second clear segment, that second clear leg to the downside, which would again consist of putting in a lower high and getting another lower low below this previous low here. Okay, so hopefully that helps you understand how we read the trend using this example in a clear uptrend, clear uptrend, clear uptrend, clear uptrend. We get this first lower low. We're no longer in an uptrend. We're considered range bound, and we will be range bound until we see two clear segments, whether that's two clear segments to the upside, two clear legs to the upside, or whether that's two clear segments to the downside, two clear legs to the downside. Right now, we don't know what's going to happen, right? If we see the lower low come through, we're in that downtrend, but anything could happen. We may see a higher low, higher high, higher low, higher high. We may see it start to build on up, and we may start to see two clear segments to the upside. So we would be in this uptrend to then range bound, but we could go right back into a 4-hour uptrend depending on what takes place here in the near term. Okay, so you have to always wait. Now let's go into like strategy. Why is this important? Right? For example, the second leg short is one of my favorite strategies to trade. And so understanding the trend is very, very important to understand the second leg short, right? Right now, we see the first leg to the downside because we have the lower low. So now what my objective is to identify where could that lower high form so I can short that second leg to the downside. Basically, this is me anticipating that if we see a proper lower high form, I'm very confident that we eventually get that lower low and we actually start a downtrend. It's called the second leg short. We identify we have a clear segment to the downside. This is the first clear segment, first clear leg to the downside. We put in that lower low. Okay, that's the first leg. I'm looking to short the second leg to the downside. Okay, and I can see clear first leg. I know there is potential to put in a lower high and get that lower low, and I want to short that second leg. And that would also be a trade where I would expect some follow through, because if we get that lower low on that second leg, we are now in a downtrend. And if I'm short with the trend, I would expect more follow through. So now I'm able to make a better decision on my expectations for the trade. Am I just looking to scalp this quickly, or do I expect there to be more follow through because I'm trading in line with the trend? Well, based on that example, if we saw that lower low come in and I'm short on the second leg, I would then officially be in a downtrend. I would expect to see more downside, more follow through to the downside, because I'm trading with the trend. And so that's why it's very important and very beneficial to understand the trend, because I'm able to make better decisions. Do I want to scalp this, get in, get out quickly, or am I expecting more follow through? This is one of the examples, the second leg short, where I would be expecting some additional follow through to the downside. But the second leg short is simple. As long as you can read the trend like we've just done, and you can identify when we've gone from, say, an uptrend and now we're range bound and we see the first clear leg to the downside, we can strategically come in, do additional analysis to get an idea of where can that lower high form. Where's the most realistic area to see that lower high form before seeing that potential second leg to the downside? And the objective is to identify where that lower high is most likely going to form to get short and ride this down on that second leg. All right. So what are some pieces of analysis that we can do? Well, when I see the first clear leg to the downside, I know I can put a Fibonacci extension to mark up this leg from this swing high up here down to this swing low, back up to the swing high. Okay. And I know that that 50% level is a very, very key level when we see retracements, whether that's a leg up, retracement to the downside, we use a fib retracement for the next leg up, or whether it's a leg down and we use that fib extension to get an idea of where that lower high could form before getting the next leg down. Fib, extensions are very, very popular, right? So I already know the best area to be looking to see where that lower high could form would be right off that 50% level. So that little 50% retracement level, that's the first area that catches my eye, and that's the first area that I see we could absolutely build a lower high off of, okay? But I still want to have as many reasons to take the trade as possible. Not just the fib extension, but as many reasons as possible. So do I have anything else that I notice in this region that gives me additional confluence to where I can confidently say this is most likely where that lower high is going to form, so I can get short on that? Well, let's do some 4-hour analysis. Do I have anything that really stands out to me on a 4-hour time frame? Well, I do have some 4-hour supply right here. I have a drop, base, drop. So I do have some 4-hour supply, and that's starting to line up with my fib levels. Do I see anything else on a 4-hour time frame? I do not. So then I will go down to my next time frame, which will be a 1-hour time frame. Do I see any 1-hour supply? I do. There's 1-hour supply right here. So I have some 4-hour supply that we just marked up. I have some 1-hour supply, rally, base, big drop on off, okay? Is there anything else that I see on a 1-hour? I could probably come in here and put a downtrend here on this, okay? Lower high, building off that downtrend, lower highs. Let's go down into a 30-minute time frame. Is there anything else I notice on a 30-minute time frame? We were in a little bit of this uptrend here. So we had downtrend resistance, we had uptrend support, we have that, fib level, and we do have some of that 4-hour demand. So this trade is actually already playing out. This is something that I should have already been in on, and I can't get in now simply due to the fact that we've already moved pretty nice to the downside. So this is one of those trades that if I would have noticed this, a few hours ago, this would have been looking pretty good for an entry. And why is that? Because I see quite a few things that stand out to me, right? The first thing that I notice is we are hitting the bottom of that 4-hour supply zone where I expect there to be some unfilled orders that get picked up that can cause price to drop on off. So I have the bottom of my 4-hour supply zone. The bottom of my 4-hour supply zone was actually right in between the 50% and the 382 extension level. That's called the golden pocket. And that's like the sweet spot on these fib extensions and fib retracements. So I have confluence, the bottom of my 4-hour supply, right in line with that fib's golden pocket. And I also notice at the same exact point, we do have downtrend resistance. So if I would have had this analysis done here, for example, I would have noticed I had 3 reasons to get short right here, anticipating this is going to be my lower high to see my next second leg to the downside and officially confirm we are in a downtrend. Right now, we're still range bound technically, but if we get this lower low, we're officially in the downtrend. And so the objective here for the second leg short was to identify where could that lower high realistically form based on the analysis we've done. And again, going back to the analysis that we've done, we would identify this was the best area to get short, anticipating this would be where that lower high forms based on this analysis. And we had 3 separate things that lined up right at the same price point to allow us to make that decision that this is the best area for that lower high to form. Off downtrend resistance, off that 4-hour supply zone, off that fibs golden pocket. That would have given us 3 separate independent reasons to make the decision this is the most realistic area for the lower high to form before seeing that potential proper second leg to the downside where we get that lower low and officially go from uptrend to downtrend. And so that's what we call a second leg short. I know I'm giving you guys a lot right now. We do have individual lessons specifically on the second leg short, but a lot of it does come down to, first and foremost, understanding and being able to read that trend. Being able to see the shift from uptrend to potential downtrend. Being able to see that this is a clear leg to the downside. And once we can see that is a clear leg to the downside, that is the first leg to the downside, we already know, hey, we could have a second leg short setting up because we have the first leg down. So now we understand there could be a strategy, the second leg short, and we know exactly what type of analysis we want to do to get an idea of where that lower high could form. And once we do the analysis and we see the most realistic area where that lower high could form, we know that's where we want to be getting into the short side, expecting the next lower low, and we could ride this second leg to the downside. So that is the second leg short. But again, going back to the main topic of this video, being able to read the trend. So hopefully that helps give you guys a little bit of clarity on being able to look at a stocks chart, read the trend when we start to go from, say, uptrend to then range bound, and then what we would be looking for next to, again, solidify that we are now officially in a downtrend, being able to look at the prior swing lows and swing highs, make those decisions, and then again, be able to be aware of what kind of setups and strategies could present themselves when we start to see a shift in the market's trend.